Hi, everyone. It's Tuesday, April 14th. My name is Arash Adnani from privateplacements.com. With me today is Brady Fletcher, Managing Director and Head of the TSX Venture Exchange. Brady, thanks for joining me.
Thanks for having me, Arash.
So Brady, we chat all the time and I always enjoy our conversations. You and the exchange announced last week some temporary relief, some very important temporary relief for the issuers, where you've lowered the minimum financing price. This was on April 8th. Can you give us some detail on this new incentive for the listed companies on the exchange?
Sure, and thanks for highlighting that, Arash. It is an important piece of news for us. It's not something that's novel to us. We've removed the 5-cent restriction previously during difficult market conditions, and including a temporary relief that was put in place in 2014. What it is previously we have a minimum share price of 5 cents for doing a private placement, and we just removed that restriction. The whole reasoning behind that is when we looked at the aggregate stock list of almost 1,700 listed companies on Venture today, there's a decent number of those that are trading below 5 cents and need that additional flexibility to be able to finance in the context of the market. We're not allowing companies that are financing under 5 cents to have a discount, so they have to finance at the current share price. And it is a temporary relief through September 30th of this year. Mm-hmm. One other restriction that we've put in place is the max number of shares to be issued is limited to 100% of the shares outstanding. And the reason that we've done that is what we don't want companies doing is a creeping change of business where this effectively turns into an RTO. It's meant to be a mechanism that companies can lever this relief to be able to finance and position themselves to come out of this market, so that when markets start to recover, the companies with us are positioned to be able to grow.
And so the restrictions as it stands is that if the company is trading at 5 cents or lower, they can raise money at their price. There's no discount if you're trading at 5 cents or less. And the other one is that they can't issue more than the existing shares outstanding. Is that right?
Right.
Okay. So what are some other, I know there was other temporary relief offerings that the exchange has made. Let's kind of go through the full listing now that we're talking about that before we move on to another topic.
Yeah. Well, and the list is not exhaustive in and of itself. I think one of the core messages here is that if companies need to have a discussion around a relief mechanism or an exemption, to come talk to us. Yeah. The doors are open. We're open to recommendations, suggestions, creative ideas on how to do new financings. The team's here to help and to work with companies. And so we encourage issuers to come have that discussion with us, and not just the companies who are trading at 5 cents, but the companies who have an idea of how to get something done. Other relief that we've put in place, we gave a 2-month extension on collecting our fees for the year. And so that's been pushed out by 2 months. And we've also provided for a staged collection process on that. And it's just trying to provide a little bit of breathing room on cash flow for companies. We've also provided some relief on deadlines for holding AGMs and for approving stock option plans. And so that's been pushed out through the end of the year. All of these relief mechanisms are detailed through our bulletins that get pushed out to company counsel, as well as on tsx.com//COVID-19. So anybody that wants to follow these, you can find it online as well.
So I actually checked on our website on privateplacements.com. I wanted to see how many companies have taken advantage of the new minimum price, and I counted 20. Now, it seems like a good number. Okay, a few of them, but I saw were dated before April 8th. It was a couple of days before, so I don't know if they had maybe already talked to you guys and they had gotten kind of the green light. But it seems like companies are taking advantage of it, and that's good news for the companies and for the shareholders.
It's good news for the companies. It's good news for the shareholders. It's good news for the markets, right? The reality is that a company that's out of capital, that can't finance their drill program or their R&D for new battery technologies, whatever it is, that doesn't help anybody. These companies need to be able to spend money on developing their businesses, and they need to be able to raise capital to do that through the markets. We do have the ability to provide exemptions for most of the rules in our policy manual. And so when companies come to us with a defensible case saying, hey, we need to do X, Y, Z. Here's what our plan looks like. Our team is actually really good at being able to help reason through that and balance maintaining market integrity with helping the company achieve their objectives.
Ask and you shall receive.
I'm not going to say shall receive, but it's a dialogue. It's a dialogue that we like to have, right?
Yeah.
And we have that dialogue actively with our issuers.
And I think that's part of the nature of the exchange. I think you guys understand that it's very entrepreneurial and things don't always go the way they're planned, and you need to be able to have those conversations. So let's talk about the other side of the coin, the investors. Okay, so this is good relief for the issuers. For investors, and I'm an investor, so the question always becomes, how do you incentivize investors during this sort of very nervous, very scary times to not just hold cash, to put money into deals, and especially into the venture? I know personally for me, one change I'd love to see is the change on the 5-year warrants, if that could be extended. Yeah. And I'm not a greedy guy. Even 7 years, I'd be happy with. Could something like that be maybe something the exchange looks at down the road?
Yeah, listen, nothing's off the table. I think one of the things that you're hitting on, and it's an active discussion that we have with not only the regulators who control to some extent the policies that we have and limit our ability to change some of these things, but also the advisory committees that we have across the country. I have one in Vancouver, Calgary, Toronto, and Montreal, made up of issuers, investors, brokers, lawyers, various capital markets participants that give us perspectives from each of the different geographies on the deal flow and what would be required to help capital formation along. And things like discount to market and length of broker warrants or length of warrants in general are active topics that we discuss around where should the exchange have limitations versus what should be in the context of the market and left to the invisible hand, so to speak, to find the right pricing tension. And one of the pieces that comes out is, the reality is most of these companies listed on venture are still relatively illiquid. They're using the platform for access to public venture capital, for capital formation to finance the next phase of their business and achieving that next milestone. And investors that get into these businesses are typically looking at it with a little bit of a longer term horizon, right? You can think of companies like Profound Therapeutics that started out on venture, proved out their technology, graduated to TSX, dual listed down to NASDAQ this year. All the cannabis companies that followed that roadmap of growing up on venture, proving out their business, graduating to TSX, dual listing in the US. This platform is designed to help individual investors participate in those earliest stages of a company's growth, where the greatest opportunity for wealth creation is, and to participate along that length of time. When you talk about long length warrants, it is something that we look at and that we actively discuss. I think the bigger question is, in market conditions like this, where you have so much volatility at the senior exchange level, or even in the US, how do you get investors looking at those technology companies listed on venture and saying, I think I can make outsized returns by backing the next clean tech company? For instance, Dynacert was our Venture 50 winner this year, and they've got a proprietary clean technology. First time that we've ever had a clean tech company the winner twice in 3 years. So really interesting story there, actually. And I just think about, how do we help bring better visibility to these issuers who are doing really cool things, have the ability to globally move the needle on things like emissions reduction, and how do we help get those companies better visibility, especially in a market when the headlines are always grabbed by what the Dow is doing or NASDAQ's doing on a senior level, because there's some really interesting companies growing with us. So,
I mean, listen, the venture is like you said, it's an exciting space because you have innovators and you have entrepreneurs that are trying to prove out business models that are early stage, and a lot of them don't make it, right? But it also shows you that creativity that a lot of entrepreneurs have. And I know there's a company on the exchange that was a 3D printing company, manufacturer, I believe. And in the last few weeks, they've done a pivot in basically providing masks and I believe a prototype for a ventilator to basically become a frontline company on this COVID-19 crisis. And that kind of shows you that creativity. Now they've gone from trading from, I think, 2 cents to as high as 30 cents. So they're doing millions in volume. What's the exchange's views on that? And also on, so there's some companies that are doing that for real, but then there's other companies that are trying to ride the wave of the hype of just being able to put COVID-19 in their news release.
Yeah. Well, so let's break those topics into kind of two separate questions, right? The first is the reality of a venture market, right? I mean, it's entrepreneurs that start with one business, and as that business is progressing, they may find the need to pivot it into something else, or an opportunity may present itself. And if you think about 3D printing, it was hot and topical a couple of years ago, and it seems to have kind of drifted a little bit down. Now you've got an opportunity where some of these 3D printing companies can pivot their production capacity into doing something to address a huge need that we have, not only in BC, but also across Canada and internationally as well, right? They're doing it in the US with open source ventilators as well, the 3D printing companies. And I think that's really exciting, right? It demonstrates the capacity of the private sector, the entrepreneurs that have businesses here, how creative people can be at trying to find ways to solve problems and use the resources they have to address big global issues. And I would say that's not a new trend for venture, right? When you think about roughly half of the companies that list on this market do it by way of reverse takeover. You think about all the junior mining companies that start out, find out they don't have an economic resource, and so management has to tighten the belt and go find something else to vend into it. Sometimes it turns into a new sector like cannabis through that as well, right? As we go through these trends and these cycles, and I think that there's a couple of really interesting pieces. One, the individual shareholder and that average retail investor trading through a discount online brokerage, if they've bought a share of this company that they thought was going to find gold and all of a sudden it doesn't, they still have another kick at the can when that management team vends something else in. And yes, they might roll back and you might restructure at a different valuation, but there's still a chance that those shares are going to turn into something material, right? Mm-hmm. And then the other piece around that is just the entrepreneurs and the ability for them to go and find something else to do and be able to convert from gold mining into cannabis or into 3D printing. And when you look at venture, one of the things that the listings team and the compliance team are really good at, and this is the segue into the second part of your question, is they're really good at going through disclosure materials, understanding what a company's business plan looks like. And if you say you're getting into 3D printing masks, what are the resources that you have to be able to prove that this is a legitimate business opportunity for you, and you're not just adding coronavirus to your public disclosure or a press release, right?
Yeah.
And we did see a lot of that during the cannabis craze, right? You'd have mining companies that all of a sudden announced they wanted to grow cannabis on their gold property and want to do that by way of press release. And you're sitting there going, okay, we understand maybe you found a more valuable use of property, but we need to go through the process of updating your public disclosure. You have to do a filing statement with us or a change of business. Make sure that the public disclosure that's out there is transparent, so that, hey, the use of proceeds for this financing isn't actually to drill for gold, it's now to grow cannabis, and make sure that the public investors have that transparency.
So really, as far as, I guess the question comes down to what the exchange is doing to protect the investors, so companies don't just get away with pivoting into things that are in fashion. And you guys do that. I mean, that's part of what you provide as a service to not just the companies, but the investors, is that protection and that due diligence.
We have 67 people on our listings and compliance team across the country working with our stock list. And the reality is that markets are dynamic. This is venture. Entrepreneurs find new opportunities, and they need the ability to move quickly and pivot. The piece that we need to be able to balance is that investor protection and transparency. And as long as the transparency is out there in the market, that companies are following the requisite disclosure and making sure the average investor who looks at a press release understands what that means and understands what the business plan looks like. We're here to work with those companies, right? If you go and you go and announce that you've got a cure for coronavirus, we're probably going to ask some questions.
Yeah, but that's a big part of it too. I think as a business owner and even an entrepreneur as well, you realize that to pivot, it's not a bad thing. It's actually a very important skill to have, and some of the best, most successful entrepreneurs have become successful by pivoting. And so I think it's a great combination of the exchange allowing that and providing that platform so that the management teams have the flexibility to do that. But on the other end, you're also protecting the best interests of the investors. And this kind of comes back to why people always say you're investing in people, right? Yeah. And if you're investing in the right people, and a good example of that is Hamid, for example, with Well Health Technologies. And I've always asked him about pivoting and his thoughts on it. And he's always said it's part of business. You know what I mean? You don't shy away from it. It's not failure. So I have a question, and this is somewhat maybe it's not about pivoting, but you touched on cannabis. So this is riding off of the cannabis comment. You're hearing a lot of companies in the psychedelic space coming out now and starting to make a bit of noise. And the very common marketing messaging that you hear is that this is the next cannabis, right? And if you missed out on the cannabis boom, here's your chance to get in. What do you think of that?
Yeah, I think a lot of people likened the legalization of cannabis to the end of prohibition, right? And that was kind of the euphoric trade that was going on, and a dynamic that cannabis had was the millions of regular users around the world that were previously getting their cannabis through illegal sources or medical purposes only, that now that whole market was opening up, right?
Yeah.
And that's a pretty unique dynamic when you have millions of active customers already, and you just need to flip the switch to convert that into a legal, transparent market that can be, monetized through the public markets. What's really interesting about the psychedelic space for me, though, is the science that is really kind of leading the way, right? And you look at the companies who are out there, and even Numinous that's announced they're doing a qualifying transaction onto venture, and the brick and mortar research and science that's behind some of these companies. The fact that they're actually trying to establish how psychedelics can treat PTSD or depression. Mm-hmm. These things that have been anecdotally known for a long time, but people are now proving the science out behind it. I think it's going to be a really interesting, exciting space to watch, and I think it's probably more like biotech than cannabis, because I don't think it's going to have the same recreational upside to it, but I think that the potential applications of it are being better understood more quickly.
I think the next cannabis just sounds better.
Yeah.
How many do you guys have on the exchange right now? How many psychedelic listed companies?
None listed with us yet, but we have some going through their either announced qualifying transaction or filing with us.
So soon.
Yep, they're coming. I think, for better or worse, venture's not always, we don't always get the first listing of some of these new spaces, right? And one of the fundamental requirements of being a venture listed issuer is that you maintain a legal business in all jurisdiction that you operate. And when you get a new business or kind of a dynamic space that's just coming online, it takes a little bit for us to understand, what are the legalities of this? What's the framework look like? And ultimately that's balancing our investor protection mandate and our public interest mandate with being a for-profit entity and providing a capital formation platform for these entrepreneurs to be able to build their businesses. when you think about something like cannabis or now psychedelics, the having that little bit of a higher bar when an entrepreneur is trying to figure out how to convince people that this business is real, that this is the next big trend, that psychedelics are the next cannabis, if that's what it is. Achieving that higher bar gives you that additional bit of credibility for finding access to public venture capital, right?
So speaking of, the venture market and some of these different flavors of the week that come from time to time.
Yeah.
Esports had, and obviously it's still active.
Mm-hmm.
And we were talking about earlier how with the work from home and the quarantine life that we're all living now, everyone's buying their PlayStations and the gaming should be on the rise.
Yeah.
Do you think this is maybe the catalyst that esports needed? Because there was excitement, but it kind of, some of the stocks were not exactly performing that well. Is this a catalyst? Like, do you think we're going to experience a renaissance of esports now?
We're definitely seeing an uptick in activity, and I have to laugh about it a little bit, right? Because the entire venture team's been working from home and remote for almost a month now, right?
Yeah.
And when we put that in place and everybody started working from home, the first two things I did was I bought an Xbox and a Peloton. And so it's, you got to laugh about it, that maybe that is what's going to drive kind of the resurgence of esports, as people don't have professional sports to play, people get into gaming again. It's pretty impressive what these systems are capable of doing now, right? When I think the biggest question is, when you're thinking about public markets and the whole esports side, we're seeing that growth in user bases, we're seeing the growth in gaming, and whether it's driven from coronavirus or something, or just broader adoption of esports, because it's the ultimate equalization, right? That males playing against females, fit people against less fit people, whatever the conditions are, to allow somebody from any individual in Canada to play against any individual in India at any time of day. It allows for that network and that ultimate level playing field, because it's all digital, right?
Yeah.
And there's something really cool and empowering about that, where anybody can play against anybody and you connect everybody around the world through something like sport, effectively, right? The biggest question I've got around it is how do you really monetize some of these things? Obviously the game developers have been doing really well. The teams, as they demonstrate growth and they demonstrate some success, they start to get the sponsorship dollars. And I think that it's that monetization path that's going to be, the next thing that's going to really catalyze that industry from a public market perspective, is how do you demonstrate that you can monetize whatever the asset is.
Yeah. And by the way, that's not just exclusive to esports. I feel like most venture listed companies, that's the ultimate question.
Oh, totally. Yeah.
So Brady, I want to just change gears real quick. So you've been on the different sides of the playing field. You've been on obviously you're with the exchange right now. You've been in investment banking, and you've been on the actual deal side as well, on the corporate side as well. I was thinking about 2008, and I'm always kind of trying to draw comparisons to 2008 with what's going on right now, because I was active in 2008, and there was a lot of things that were learned. You were at Canaccord in 2008. You were in the investment banking business, and are there parallels that you see, and are there lessons learned from 2008 that can be applied to the current situation that you can share with me and our viewers?
Yeah, I think this is where the legal disclaimer comes out, that I'm not an investment advisor, a wealth management guy. Don't take my investment advice. And it's a daunting time for anybody that's thinking about investing into any public stock, whether it's one of the FANGs or all the way down to a company doing a 5-cent financing on venture, right? every headline you get is markets either are about to collapse again, or markets have bottomed and are about to get back into a long-term recovery, right? I think what it says is around the world, everybody's crystal ball is a little bit foggy these days. And every one of these market cycles is always different, except, there's always some pretty big similarities between them, right? And I remember back to 2008. In 2007, I was putting together pitch decks that showed Canaccord participating in over 680 deals a year. So we were doing more than 2 deals a working day through that firm, and it was all the retail-driven venture stage deals, right? And then 2008 had the financial collapse, and Matt Gazenbeek was our head of institutional sales and trading at the time, and he started sending just in the email chats around lines from Rudyard Kipling's poem "If," and it was all just about keeping your head that this too shall pass, and it's. When markets get emotional and when markets start to react with such severe violence and volatility, all you can do is just try to keep your head, right? And if a week ago you had sold everything, you would have missed out on 20%.
Yeah.
Right? That's the reality of this, is that when you think about the broader macroeconomic trends of a growing population, we were just talking about eSports, the need for servers and electrification and grid and electrical grids around developing nations. You think about the adoption of electric vehicles. Where does the copper for that come from? The nickel for batteries. All of these trends are still fundamentally intact, right? Mm-hmm. And I that's one of the things I really like about the venture side, is that the companies listed with us, you're not speculating on whether they sell another 100 million cell phones into China or not, or whether Apple makes another 100 million handsets. What you're betting on is whether this company is actually able to prove an economic resource in the ground. And that's a step function valuation increase or decrease as that bet proves out or not, right? Same thing with the psychedelic space. If a company is able to prove that their science is able to extract and use the psychedelic for treating depression, and they're able to establish that science, that's a step function valuation change. All these companies, you mentioned Hamid in Well Health. Every time he acquires another business, and he's great at using that whole public share currency for making acquisitions and leveraging the fact that he's a public company to be able to make acquisitions and scale his business quickly. Every one of those acquisitions is a valuation change for him, right? And that's what really excites me about the venture side of this business, is that the companies and the entrepreneurs that are here are making swings that work out or they don't work out, but it creates that opportunity to participate in some pretty exciting growth.
So if someone could buy large caps companies that would be considered very safe investments right now, as opposed to buying a company on the exchange, right, which is more high risk. Why should someone, again, what's the incentive for someone to buy a venture listed company right now?
Well, I'd never sit here and say, take 100% of your life savings and plow it into a 5-cent financing on a company, right?
Or it could be a 2-cent financing.
It could be a 2-cent financing, right? And now, exactly. So now, I think what you do want to look at here is the number of companies that we have that have successfully transitioned off of the venture market up to the TSX. We've had over 680 of them now that have graduated from venture up to TSX. They've used that as a big number. It's a big number, right?
Yeah.
And some of them are now some of the biggest companies in Canada, right? Wheaton Precious Metals, right? That was a CPC RTO. Canopy Growth Corp was the biggest cannabis company, right?
Yeah.
And you listed down in the US. Started out on venture, doing a reverse takeover of a capital pool company called LW Capital. And I think that's what should be exciting for investors is, keep your exposure to equities through some of those senior names or ETFs, but come looking on venture to find, that cool story that could become the de facto treatment for prostate cancer, or, what could scale into being the biggest e-health play out there. Those companies are down and listed with us, and that's the biggest objective we have as an organization right now, is how do we help bring visibility to those issuers? How do we help them get their story out? How do we help demonstrate the number of clean tech companies that are growing here that have the potential to move the needle on global emissions, but they're growing with us on venture, financing on venture, and building from here.
So listen, that's part of my pitch for why investors need to trade venture listed deals, or really any early stage company, is the ability to participate in some of these private placements. And obviously this interview is being posted on privateplacements.com. So there's a reason why we do this, because we truly believe in the value. What, from your standpoint and obviously your experience of being in the space, what are some selling points as to why investors, or selling points for just investing in a private placement or in a financing that you can share with us?
I think one, it's for companies and investors, it's the efficiency of a private placement, right? Companies are able to rely on their existing public disclosure, circulate a subscription agreement, collect the funds from the investors, and if it goes through a brokerage account, it all settles directly to the company, or the company can hold a closing at their lawyer's office and cash everybody's check. Just that pure efficiency of being able to use a templated document, not have to negotiate special rights to preferred shares with anybody. It's just straight common shares, context of the market. You've got a good barometer of where the stock's trading already, and so something to benchmark off of. And if you do a little bit of a discount to market, then it creates that immediate financial gratification for somebody that participates in a private placement. The other piece is most private placements come with some form of warrant coverage, and that warrant coverage is effectively your option on participating again in the company's growth. Warrants are structured a little bit above market, but if one of these technology companies proves out that they're the next big thing in eSports, then yes, where that warrant is priced above market today, in 2 years when you're ready to exercise it, or in a year when you're ready to exercise it, hopefully it's in the money for you and you're able to make a little bit of extra money through that. For the company, it's a built-in financing mechanism. If they execute on their business plan, then they know that they have that next round of capital coming in. One other, really important piece to it though is most of the companies listed with us are cash consuming. And that's why it's so important that we have the flexibility for them to be able to finance, and why we provided that temporary relief last week around the 5-cent rule. Companies need to be able to finance, and for an investor participating in a private placement, it gives you an ability to look at the use of proceeds and say, if I put my check in today as part of this financing, is this company going to be in a position to achieve that next milestone? Or am I anticipating that they're going to have to come back to market again and again and again before they hit a value creating milestone? And that's a big test for you to look at as an investor, right? Does this check help this company do something that will create value? And if so, then they'll have access to more capital down the road.
Yeah, that's a big one. That's actually one that I know we covered, that the use of proceeds on our website. And it's actually interesting to see between different sectors the trends as far as what most of the money being raised is going towards. But I totally agree with you. I mean, the efficiency, the discount the market, with warrants is like getting rewarded twice if you make the right bet, right? So Brady, I don't want to take up more of your time. I know you got a busy day. Any final words you'd like to leave us on here?
I think we're in a really dynamic time, and everybody from the entrepreneurs that are with us to the regulators, and how CSAs provided relief around timing of financial statements, to how our teams adapted and provided relief on timing, the 5-cent rule, and even the federal government, right? We're all actively trying to figure out how do we support business and how do we keep this going. I do have to give the government a little bit of credit, because when they rolled out that original 10% wage subsidy, they'd again limited it to Canadian-controlled private companies, which excluded all public companies. And through some of our advocacy work, combined with other leaders like Neil South and Sheldon Pollack, everybody was able to rally together and get them to not only increase the 10% up to a 75% wage subsidy, but then also to include public companies. And so you've seen Air Canada and WestJet on the bigger end, all the way down to some of the smaller companies being able to hire back those employees. And it's just so important that those government support systems are in place to be able to help all of these businesses keep their staff employed and keep growing. Would love to see them expand that even further to be able to cover more of the mining companies and the companies that might not meet their revenue test. Because I think that's a big one right now, is that, you know, it doesn't capture the high growth firms effectively, those technology issuers that are developing something that are pre-commercial today, or the mining companies who don't have a revenue line to test against yet. And those companies need support too.
Well, I think that's going to go a long way, but it seems like the government's shown the flexibility where they are listening. And I think through the advocacy, like what you guys have done, hopefully everyone can have access to the relief that's going to help companies survive.
Yeah. Well, I'm looking forward to coming out of this again, right? And that's, you mentioned 2008. We all came out of it again, and businesses grow. It's the importance of markets. Companies need access to capital, and they need to be able to continue building. And so we're here to do that.
Sounds great. Well, you guys are doing great work, and really appreciate you coming on, Brady. Thanks for joining us, and hopefully we get you back here with some new news, maybe 7-year warrants, who knows.
Thanks, Arash.
All right. Thanks for your time.
Always good. Thanks.